Hello, I'm Andy Prosser. I'm the Head of Investments at InvestEngine. Welcome back to our weekly Market Roundup, which is your quick look at what's been moving the markets and what it means for investors. So it started off as another pretty quiet week this week. Thankfully, the markets managed to hold on to the gains that they'd made at the end of last week after Powell's comments at Jackson Hole, where he indicated that more rate cuts were on the way because of this weakening labour market in the US. As mentioned on the Monday forecast video, Nvidia's earnings were the big event this week because not only are they the biggest listed company in the world, they're also used as an indicator of the health of the kind of AI growth story. And as expected, their earnings were really good. They announced they'd seen 50% revenue growth since last year, which was higher than the market expected. And they also beat estimates on earnings and margins and projected sales for the next quarter. So a really strong set of results. And yet the stock still fell 3% after the announcement. And that was for two reasons. Number one is that the stock, Nvidia, it's obviously had an incredible run, and investors have now become so accustomed to the company beating expectations that they now want the company to beat estimates by even more. So a beat isn't good enough anymore. It has to be a big beat to keep up with expectations. Secondly, the company didn't provide any guidance about revenue from China, which investors didn't like given the trade tensions between the US and China at the moment. So those results kind of pulled the market down a little bit after hours on Wednesday. It wasn't a huge hit to the market. And in fact, the market recovered really quickly on Thursday. And that was because the US came out with some encouragingly strong GDP numbers, which showed that the US economy was expanding faster than was expected. And that drove the S&P to another all-time high when you measure it in US dollars. Finally, we had some US inflation data come out earlier today, that's Friday, which was in line with expectations and didn't disrupt the market's expectation of a rate cut being on the cards. It actually slightly increased the market's expected chance of a cut at the next Fed meeting on the 17th of September, which is now at almost 90%-ish. Okay, that's it for this week. If you have any thoughts or comments, please feel free to leave them below. Otherwise, for more updates, head to our blog, sign up to our newsletter, and we'll be back next week. Thank you for watching.